Good day, everyone. The economy in the United States has grown at least than 200% rate since the third quarter of 2015. This is the same to say in the last year, the slowest annual advance since 1949. Economies are expecting to grow, this time, the economy to grow of 2.5% in the third quarter, according to the FXStreet economic calendar consensus. It will mean an increase of the pace from the 1.4 posted in the second quarter of the year. Consumer spending has kept the US economy from contracting during 2016. Will it remain like that? Economists are predicting spending still contributing, but at a lower pace. Another factor to consider is that the business investment, the spending in research and development like software or intellectual property rose at the fastest pace in a decade. But the investment in equipment didn't rise at the same level. Even structure declined in 2016. Is this a new normal? Is this a sign of the new industrial revolution? But overall, this gross domestic product number will be key, as it could mean the consolidation of Hillary Rodham Clinton in her run for president, or a candy for Donald Trump. Good morning, guys. How are you? Hi, Valeria.
Hi, Yohay. How are you guys?
Good to be here with you.
Yeah, welcome, guys, to this live coverage. We are starting the FXStreet United States GDP live coverage. We are live with Valeria Bednarik from FXStreet and Yohay Elam from Forex Crunch. So, Yohay, what we can expect for today?
Well, I said the consensus is for 2.5% annualized GDP growth. That'll be a jump from 1.4 last time, also 1.1 beforehand at 1.4 in Q4 2016. So all in all, 3 quarters of very poor annualized growth in the United States. The new normal, as you mentioned, is 2 to 2.5%. So we had 3 quarters without that. We're expecting a compensation. We were expecting compensation that would mean 3.5, but we didn't get it. We aren't expecting that. We're expecting only 2.5. The Atlanta Fed measure began at 3.6, 3.8, and now it's back to 2.2. Anyway, as you mentioned, it also has political implications. We're 10 days towards the elections. Clinton has a lead, but it's not sort of 100% certain. And if there's poor growth, it'll, of course, be exploited by the challenging party, by Donald Trump and the Republicans. So it's explosive. And also for the Fed, Fed is on track to raise rates in December, but if growth is poor once again, under 2%, I think they might reconsider. I expect for the US dollar that if we have that the US dollar has momentum, 2% should be enough for sort of continuing growth, good enough. Above 3% dollar rally, under 2%, we could see a setback for the US dollar.
The consensus is very confident that the Federal Reserve will hike rates in December, right?
Yeah. So it's around 70% last time I checked it out. So yeah, we got significant hints that December is
the month to
happen.
be. Yeah, it's the month to be. Okay, thank you, Yohay. Valeria, so what's going on in the market? What's going on?
Pretty much nothing. I was taking a look at the market today, and I realized that all through the week, the euro just moved within 100 pips range. In fact, it's been a bit short of that, but the euro has been trading in between 840, 940, 850, sorry, and 940. So not much going on. The market is waiting, I guess, for this GDP release to decide whether to take direction, right? That's when it comes to the euro. The rest of the currencies are being a bit more interesting, with the pound still weak, weighed by Brexit. Nothing new there, right? Despite we have seen improving macroeconomic data after the initial knee-jerk following the Brexit referendum vote. The fact is that this weakness in the pound and the perspective of a hard Brexit will probably keep it down, right? And what seems interesting is the Japanese yen, which is above 105 for the first time in a couple of months, right? But it's all about the GDP, If the GDP is a miss today, we can see the dollar yen quickly reversing its latest gain. So that's where my attention is focused today.
Yeah, I'm watching in your TradingView multi-chart account. There is like the euro pound just went to 90.0, yeah, 0.9, 90. And also the cable just make
Yes.
a yeah. So what was that?
Sorry, I didn't understand your question.
What's the motivation of that movement? The pound is weakened, is weakest, or the weakest currency in the currency war.
Yeah, today is among the weakest. Yes, indeed, this week the pound has been unable to regain ground, and it's slowly but steadily losing ground. So any cross of a pound will probably be led by pound weakness.
Okay, thank you, Valeria. We have a question here from the audience. Let me check this from the YouTube channel. It's from Ton Chan. He has been the dollar Japanese yen of the short side, not looking good. What is your opinion on that?
Well, as I said just now, it's all about the GDP now, because if the GDP figures beat or coming line or above expectations, most likely scenario is that the pair will probably keep on running. I have a target around 106.60 right now, and that's a probable roof for this bullish movement, right? But of course, if the data is disappointing, and I mean really disappointing, below 1.5 or so, we may see that the pair going back to 104. Problem with dollar yen is that when it gets into a trend like this one, it hardly looks back. It's the worst pair to look for pullbacks, to re-enter a trend or something like that. The fact is that it's moving higher and it's technically bullish, and it will probably continue.
Yeah, I see. Coming back from UK, Yohay, what happened yesterday with the GDP in the United Kingdom?
Came out better than expected. Once again, data post-Brexit hasn't been a disaster so far. This doesn't mean that the long-term implications of Brexit are going to be good for the UK. They're probably going to be bad, but at least in the quarter immediately after Brexit, we've seen that GDP rose by 0.5% quarter over quarter, 2.3% year over year, better than expected, but only gave a temporary boost to the pound because markets are already looking forward. And if, as you mentioned, we're going to have a hard Brexit, it's still a factor that weighs on the pound. This morning, more specifically, we had a ruling in Northern Ireland that that for Brexit to go forward, the parliament in Northern Ireland doesn't need to approve Article 50. It's just a small piece of news from a small part of the UK, not to offend anyone, but all in all, the mood is against the British pound, so any piece of news that can be negative has a bigger impact than a piece of news that is positive, like the GDP release.
Can we say that the Brexit impact hasn't been that bad for the United Kingdom? Only in the pound matters. I mean, the pound has been declining for a while, but not in the economy. The impact of Brexit. What do you mean? What do you think about that?
I think the longer term impact is going to be bad because companies are some of them are going to move out of the UK. Just the uncertainty will have a negative economic impact, and then the breakup, which currently seems to be a nasty breakup, if you wish. Not a soft Brexit, but a hard Brexit, that could be negative as well. In the short term, weaker pound is good for exports, but also raises inflation. I suspect that if we don't have a rate cut from the Bank of England, and because of rising inflation, then perhaps we'll see some kind of a stabilization in the pound. It won't collapse. Some banks expect pound dollar to fall to 115. I think it's a bit too far. I think it's now trying to find a base. It doesn't mean it's turned the corner, but not going to collapse soon.
Yeah, you're telling about 115, but I know some experts that are asking now or starting talking about 111, the lows in the 90s, but it's too far. But there is possible or there is not possible at all.
Everything's
Everything's
possible.
possible.
Yeah, everything is. What do you think, Valeria, about the cable? You know, about the pound? It's more. There has more room to fall or what?
The fact is that this latest positive data we got after the Brexit is due to a cheaper pound, as Yohay was saying, right? It's getting much for export, but of course, imports are getting also more expensive. Inflation is rising, and wages are not rising at the same pace at the same pace than inflation, and it's a long-term bearish for the pound, long-term bearish for the UK economy, right? So these positive numbers we have seen lately are relevant, in fact, in long term. Moreover, if the UK ends up with a hard Brexit, which is the most likely scenario, in my opinion, because I do believe that the rest of the euro area won't allow them to get the benefits after leaving the region, after making all this breakout.
Okay, thank you. Let's quickly move to the Australian dollar, minor dollar related pairs. What do you see in the Australian dollar, Valeria?
Well, it's currently weak because falling commodities prices. But the fact is that if you take a look at the bigger time frames, like daily or so, the period has been pretty well contained between 74.50 and 77 ever since, I don't know, early July, right? So there's not much going on in here. The period is in range. It was a positive surprise we get this week from quarterly inflation in Australia, right? So whatever happens today depends on whatever the greenback or the result of the GDP number is. But I'd see it in a long-term consolidative phase. I'm not seeing a lot of a bearish or bullish momentum. 74.50 is the base of the range. Market has been buying there. 77 is tops because spikes above that level have been quickly reversed. And pretty much that's it. So I like to play those extremes these days.
Thank you. And what do you think about the Australian dollar, Yohay? There is something fundamental that we have to take into account on that pair?
Well, apart from the inflation figures that Valeria mentioned, I'll just add that we have a new governor in the Reserve Bank of Australia, Dr. Philip Lowe. He's actually from within the bank, so it's not an earthquake. But he did sound a bit more hawkish, not so keen on raising rates. So far, hasn't had a big impact on the Aussie because, as Valeria said, we're stuck in range. We've seen the US dollar strengthening this week. I think.
Okay, guys. Sorry, Yohay, we are 1 minute to go to the data. So what we can consider like a big surprise to the upside in the dollar or big surprise to the weakest side? Yohay and Valeria?
1.5 or below, it's very bad for me.
Yeah. And 3% or up, it's great news.
It's shockingly.
It will be the first time in at least a year.
Yeah, in over a year, but it's okay.
Okay. 10 seconds.
Yeah.
Yeah, guys.
Look at the charts and find it out. Okay.
2.9, 2.9.
Oh,
2.9. That's good.
That's really good for the greenback. Gold is the first to plumb. Also follows.
Dollar stronger.
CAD follows. Yeah. The Japanese yen is breaking through new daily highs, a couple of pips. Market is trying to digest the news. 2.9. Well, personal consumption figures are already out. I can see them.
Have to refresh my page.
Yeah, so headline figure is good news.
Yeah.
Good enough also for, well, if we had 1.1, 1.4, Q1, Q2, now 2.9. So the average is now closer to 2%, closer to the new normal. So it's sort of as the Fed expected.
The euro changing cars. Okay. Let's see how the rest of the news came in.
Looks like the US dollar is unable to gain too much. Oh, personal consumption 2.1 instead of 2.6 expected. So that's not so
very bad.
Well, actually, but what is the reason that the GDP went up? You know, we have to figure out that because consumer spending was like a fueling the economy in the last quarters. But if we are consuming less, that means that the other items of the economy are growing better. Maybe it's not that bad.
It might be inventories. If it's inventories, it's not good news because when inventories are rising, replenished, contributes to GDP, but it means that the next quarter will have a depletion of these inventories, that they'll fall, and GDP will be lower. So, but let's see if we have this figure.
It was the highest
in 2 years.
2000, yeah, in 2 years. Okay, initial reaction is higher dollar. No, lower dollar now.
Fix it, in fact, because dollar Japanese yen refuses to move. It's stuck around its highs. You all see it's near the lows. Let's see how the rest of the market reacts and how they take it. Give them 15 minutes to digest the news and set the direction. But for me, it's a good news, like a positive news.
Yeah, headlines the most important.
By the rumor, sell the fact.
Core PCE is 1.7, above 1.6 expected. PCE, not core, 1.5 instead of 1.4. So we are seeing sort of inflation ticking up all over the world. Employment costs 0.6 as expected. GDP sales 2.4 against 3.2 expected. That's worse than expected, so maybe it's imports vs exports. I don't know. Anyway, euro dollar currently 109.30, a bit above where it traded before the release. Let's see if we have more data.
Okay.
Price index. Okay. Oops.
Yeah, the dollar yen has broken up.
Yeah.
So after all, good news is good news.
Yeah. And there go the CAD and the Aussie are trying to go towards their lows against the greenback. One seems to be reluctant to find a certain direction is the euro. I'm not quite convinced of what's going on in there and the reaction of the currency, but well, let's see.
So the headline in Bloomberg says US economic growth rebounds and boost from exports and inventories. Exports is good news. Inventories, not so good.
Okay.
So exports accelerated, adding the most to GDP since the final 3 months of 2013.
That's good, especially if the dollar is that high.
Yeah. So net exports added 0.83 percentage points to GDP growth. They made the difference between sort of 2.1 to 2.9.
Okay.
Yen likes it.
Yeah, it's keep on moving higher. The euro has an immediate support around 890. I mean, a short-term intraday one. So that's the level it has to break to extend its slide today. Stocks have here losses and recovered modestly. Nothing really relevant going on there. And commodities are a bit more interesting with gold back heading towards 1260. Canadian dollar is the one suffering the most at the time being, right? Okay, let's give them a second.
Also, the Canadian dollar.
Yeah, it's
Bottom up too.
the one, yeah.
Looks like the market is cheering USA.
Yeah.
Well, you know, that's a candy, but for Hillary Clinton, share market is welcoming any good news for the United States economy. So. And beside the economy, they are watching for a Hillary Clinton. More probably now, Hillary win in the run for president. So,
yeah,
one less risk in the market.
Yeah, recent polls have been just a bit tighter. So let me refresh this. I mean, the chances, according to Nate Silver's 538, have been around 85, 87% for Clinton, and now it's only 81%. Still a high percentage, but in the past few days, sort of, there's been a grinding down of chances for Clinton. Still favored to win. Still, it'll be a big shock. 5 times Brexit if Trump wins.
Yeah. So, Yohay, and in terms of Federal Reserve possibilities of hike, what are the numbers for December?
So we have them here. Let me refresh it. Let's see if we have a reaction already from bond markets. Okay, that's for November. For next week, 10%. But we have a movement. We have moved from around 80% to, from 80% to about 83% for a rate hike. I mean, for a higher rate than it currently is. This GDP sort of
Positive.
Conviction.
Yeah. Okay. So it will mean like a good thing for the dollar, for the dollar bulls, right?
Yeah, and we're seeing the positive reaction in the US dollar. Not anything huge, but positive reaction.
Okay. So in terms of the next week, you know, taking that the next week will be a busy week with, you know, central banks and non-farm payrolls, and the week before the election. What the traders, the independent trader, has to focus, you know, to avoid. What would your recommendation to avoid the noise, all the noise, but to focus?
To avoid the noise, go to a quiet place. But more seriously, I think there will be lots of noise next week. It will be impossible to avoid the noise. The noise will come from the last-minute opinion polls regarding the elections, and this comes in together with explosive mix of figures. We have the Fed decision. I believe, my expectation is that they will give us a bigger hint about a hike in December, maybe not a full commitment, but maybe change the wording from the next meetings to the next meeting. And non-farm payrolls, of course, with the full build-up, ISM non-manufacturing, manufacturing PMIs, ADP, should be more or less the same. The bar is relatively low. all this together, I think will make markets quite choppy. I don't think we'll get a clear direction. For me, a bigger market mover event might be the decision of the Bank of England.
Yeah.
When they cut rates in August, they hinted about another rate cut now in November, but since then, the pound fell in value, inflation went up, so maybe they'll keep their powder dry, wait, so that I believe we will see more movement, more logical movement in the pound than in too much noise from the US dollar.
Okay, thank you, Yohay. And coming back to you, Valeria.
Yeah.
Right now, what is the technical situation of the currency market? Where is the the strongest and the weakest currencies in the market?
Well, I would say that the weakest are at this point the pound, the yen, and commodity currencies. The dollar is indeed the stronger, and I have to be honest, I'm a bit of surprise of what the euro dollar is doing. Somehow I am understanding that the pair is trying to bottom here, not yet confirmed, but I have mentioned this multiple times in the past. The euro dollar has been trading between 800, let me change to the weekly chart, 840, right? Around that area, and 1460 ever since early 2015, right? We have, of course, a couple of moves beyond that area, but those were quickly reverted. So we test that bottom this week, right? A couple of pips above 840. So market is trying to set a bottom there, and that's maybe the reason why the pair is refusing to extend its slide at this point. Nevertheless, if the dollar keeps on rising, and I mean after Wall Street opening in about an hour, then we'll probably see the pair finally giving up, or at least being unable to regain the upside. In the shorter term, 950 is the first resistance, and above that, 110, 110.10 seems the probable bullish target for today.
Okay, thank you, Valeria. And let's move to other pairs like the Canadian dollar. What's your take on the Canadian dollar?
Okay, to be honest, current dollar strength after the news, stocks weakness, and moreover crude oil weakness are leading the advance in this particular pair. We are we're at multiple weeks high, so I'm expecting it to keep on running. I believe that 135 is, of course, like line in the sand, because it's a psychological level, and it will take a break above it to see it going further, at which it will depend only on oil prices. If the oil remains weak or plummets below 45, then there's a good chance the dollar CAD will take this level, but if not, will probably remain slowly but steadily grinding higher.
Okay, thank you. Yohay, moving to the Canadian dollar major correlator, that is the oil. What's going on in the oil market?
Well, the last big event was the Algiers Agreement. Many countries in OPEC decided to get closer to some kind of cap on oil production in the OPEC meeting at the end of November. Oil prices went up and then sort of went just a bit above the highs, above around 52, almost 52. But oil prices are still confined, still stuck still in the range, basically. The Canadian dollar has been unable to take much advantage of the rise in oil prices. Also, good employment figures didn't help too much. The Bank of Canada has been relatively dovish, saying that they can add more stimulus. There might be a need. So, and as Valeria mentioned, of course, the strength of the US dollar is just overriding. So that's what I see in terms of the current dynamics of dollar CAD.
Okay, thank you. Valeria, let's talk about the euro British pound. I know it's moving quite higher again. What is your take on that?
Give me a second. I will bring up the chart. To be honest, I expect a continued advance, not because of the euro being strong, but for the pound being weaker. As we discussed at the beginning of the webinar, the pound it's meant to weak. It's poor pound. It's been hit by all this Brexit chaos. And honestly, I would expect the pair to somehow establish above 90 and even advance up to 93 during the upcoming month. I don't see much of an euro strength, right, going on the market. There are reasons for the euro to regain the upside. Moreover, we are expecting the Draghi to somehow act in December. So I don't see a huge rally going on in here, right? But anyway, the pair is bullish and will probably continue to do so.
Yohay, what are the expectations from the next ECB? What might I do in December?
Well, he left us a bit guessing, but I believe they'll add more to QE. I mean, continue QE beyond March 2017.
Yeah.
There is an open question if they'll keep it at 80 billion euros per month or reduce it just a bit, begin tapering. I think they'll probably continue it for some time, probably not without an end date, not QE infinity, but they will keep it at 80 billion for some time, maybe tweak the rules, allowing them to buy more types of bonds or corporate bonds, or changing. I mean, they have some limits on issuers, things like that. So they might tweak that to avoid the case that they won't have anything left to buy. But we'll have inflation figures on Monday in the Eurozone. According to what we've seen from various countries, I believe we'll see a rise in inflation because we're seeing it elsewhere. The base effect of year-over-year oil price is moving away, but core inflation remains weak. Growth is mixed in the Eurozone. It's not, Eurozone economy is not rising really strongly, and I believe, as the ECB said many times, there's a need for accommodative policy. So I think the ECB's policy continues to be sort of play against the euro for quite some time.
Okay, thank you.
Sorry.
Yeah, go ahead.
I was thinking of inflation readings we have earlier this week from the euro area, today from Germany. There are slight improvements, but in fact, we are still closer to deflation than to the 2% target of the central bank, right? So I don't know, whatever the other reports came out in the euro area, whatever Draghi says, the fact is that inflation, it's still way too low, right? And the other factor that we are forgetting to mention is the fact that the ECB was created purely to keep inflation under control, right? To keep the 2% target. That's the only reason for the ECB to exist, right? So
yeah.
I don't see how Draghi will have any other choice than extending the date of the QE program, or even adding more stimulus, which we know it does not work because see what's going on in the rest of the world, right? Japan added stimulus, China added stimulus, the US had added stimulus for centuries, right? And it did not work, right? It did not work as they were expecting. And of course, the euro area, not it's a crazy game, if you want to call it. But anyway, the ECB is expected to do something in December, and I don't see how Draghi can do any other thing.
But Valeria, they do the opposite in the past 5 years, like reducing debts and making a really strict management of money for countries in the south, Spain, Italy, and Greece, and the economy didn't grow. So, but right now they are investing more money. They are in expansionary policies, and at least they are growing something. Let's say 1% or 1%, 1.5%. But it's not really good. But it was better than it was when the contracting or I don't remember the word now, but where they were trying to reduce the debt rating from the country. You know what I mean? So perhaps they have to do that to inject more money, to pump more money to the economy, not the other way.
Yeah, that's pretty much what I was thinking. Also, I'm thinking right now, right? Are we going to have a Eurozone GDP without UK? Are we going to look for that number? I know that's something that it's actually published, right? But we will have to maybe the UK good readings we have lately may bump all the region GDP figures. But hey, I will take it out of the question if I want to trade euro accordingly to macroeconomic ratings. So I don't know. The euro area, it's for me the beginning of the end. I always thought that it would be Greece, the one that triggered this, and see what's going on. Greece is in a chaotic situation right now. They still have no money. They still have a lot of issues, financial, economic. And we forgot about that, and we are just talking about Brexit. But the fact is that the euro area as a union is collapsing, right? It's not working. No one dares to say that. But it's a fact.
Where's the prosperity that was promised?
Sorry, I didn't hear you properly.
No, the economic situation is still, even despite the recent growth, it's not so good. I mean, 10% unemployment, no unity, no prosperity. I mean, the European Union was supposed to be good for everybody, and we're not seeing that. So, yeah. Brexit, might be the beginning of the end.
Okay. Valeria, we have a question from YouTube. There is, let me read it from Lim Hu-jong. He's asking if there is the dollar Japanese yen not considering a breakout in the dollar Japanese yen. This is
a breakout towards where? Towards the upside.
Yeah, it's outside, but it's not like a failing break. Or what do you think about that?
No, I honestly believe that the pair will probably keep on rallying. If we have pullbacks, I do see them limited. I could think that the pair may change course and turn back lower if we break below this previous daily high in the 104.8 region. If right now, in the next couple of hours, the pair moves below that level, there's a chance that it will turn lower. But if it falls towards this region and bounces or holds above 105, the risk will remain towards the upside for me.
Okay, guys. So, what do you think about to do a wrap up?
Sure.
So we can, close the session and make a summary of what happened and what will happen in the middle term in the next weeks. So, who wants to start? Yohay with the fundamental wrap up, or Valeria, the market wrap up?
Yeah, well, as usual.
Okay, go ahead, Valeria, ladies.
Women talk too much. Anyway, US release its advanced third quarter GDP numbers. It was really a beating, 2.9%. I was checking the data released alongside with the GDP. We have the employment cost index, which is not a big market mover, but it's flat at 0.6%, showing me that the salaries are not picking up as they should in the US. But anyway, overall, personal consumption expenditures were positive. So overall, data is still supportive of a US Fed rate hike next December. So the dollar is generally stronger. The euro is refusing to give up. As I mentioned earlier, I do believe that the market may be not willing to set at these levels, which are the base of the long-term range. But overall, I do expect some dollar strength for the upcoming American session, particularly when I look at commodities that keep on easing, and the OC and the CAD and the yen that are weaker. Pretty much, I do believe that we are going to have some further dollar strength, but limited because we have several central banks next week, right? We have Bank of Japan, Bank of Australia, the Fed, and Bank of England. So the market will probably not move too far away from current levels and wait for for them to take stronger positions, stronger direction definitions. So beware of that.
Be afraid. Be really afraid.
Very afraid, yeah. Anyway, we have, as traders, as investors, we have the tendency to hold back when we have a central banks week. But the fact is that central banks are offering very little lately, and I don't expect too much action, to be honest, from them next week. Nevertheless, the market will wait.
Okay, thank you, Valeria. Your turn, Yohay.
Yeah, I'll start off from where Valeria ended about central banks. We talked earlier about Draghi. Draghi tells us on many occasions that governments need to do more. They're not the only central bank that says that.
Yohay, sorry, I'm not listening you well. There is some, yeah. If you can, not really. Valeria, did you hear?
Yeah, there's a problem with your micro.
Okay, now I think now it's working.
Yeah, can you hear me?
Yeah, a little bit better, not perfect, but better.
Closer to the microphone. Anyway, what I was
I think
saying.
it's the connection. I think it should be the connection between in any of the parts. But okay, go ahead.
So yeah, central banks are not doing enough for us for moving markets. Regarding today's GDP, the good things are the headline figure of 2.9, better than expected, good enough for politics especially, and exports. The rise in exports is good news. Bad news is consumption is weaker than expected, and inventories, which contributed to higher growth, will come back to hit us next quarter. All in all, it's good enough to keep the dollar momentum, to help Clinton, which markets like. So I believe that next week, as Valeria said, it's very busy. My favorite, the central bank I'm watching out of all four is the Bank of England. I think the others will not rock the boat. And next week also watch out for opinion polls towards the elections. Remember that with Brexit, we had movements 2 months, 3 months before the vote, but the biggest reaction to the polls came just in the last moment. The market wakes up towards the end more than beforehand. So watch out next week for opinion polls about the US elections.
Okay, thank you, Yohay, and thank you, Valeria, for coming today. It has been a pleasure to be with you guys.
Thank you.
Thank you, Valeria, and thank you.
Thank you. Bye-bye. Has been great. Thank you.
Okay. Okay, guys, I want.
Happy to see you next week and better weekend. Bye-bye.
Yeah.
Bye-bye, Valeria, and ciao, Yohay. So, guys, I want to invite you to next week. Valeria will be with us on Tuesday at 11:30 GMT, and Yohay will be with us on Wednesday at 7 o'clock in the morning. We will be starting a warming up for the election, for the US election coverage, with several shows, several webinars about how to take profit of the US election. Who will win in the elections? Hillary Clinton or Donald Trump? Not really. Who can win will be you. You can win with the election. So just turn to FXStreet, stay in FXStreet live video, and stay in FXStreet reading all the coverage that we will producing, and you will take profit for sure on any outcome. Especially we will have a panel. I'm gonna put you the link right now. The panel, our panel of the US election with Martin Armstrong, the world famous analyst Martin Armstrong, and the Forex Live CEO Adam Batten. And the moderator will be Russ Barland, our analyst Russ Barland. Okay, guys, I'm gonna put you the link for the coverage, well, for the panel right now in the chat. If you want to register to the panel, it will be really, really nice, because you will get the recording and you will get the reminder, so you won't miss anything on that. Any information, you won't miss any information. Let me copy and paste here panel. Okay, I'm gonna send this to the same in the YouTube panel, in the YouTube page. Okay, cool. Okay, guys, it has been a pleasure. Stay safe, trade safely, and see you next week. Well, I'll see you now because Dr. Sivaraman will be with us doing reviewing his trade from the spike calls that he provided before the event. See you, refresh your page, and stay safe. Bye-bye.